Good evening, everyone. My name is Ronnie Lau, and I am a manager in government relations here at the National Education Association. Thank you so much for everybody for joining us this evening for this webinar. We got a lot of great content ready for you guys to talk about federal student loans and some updates from the Biden administration and opportunities for you guys to take advantage of. So a lot of great content ahead of us. But before we begin, I want to start to introduce some of the folks that are going to be speaking to you this evening. So why don't we go ahead and start with my colleague, Sam.
Thank you so much, Ronnie. My name is Samuel Junietz. I'm a senior policy analyst within NEA's EPIC Center, and I focus on higher education and workforce issues. Now I'm going to pass over to my colleague, Jeff.
Thanks, Sam. Hello, everyone. Thanks for joining us. I'm Jeff Burritt. I'm a staff counsel in NEA's Office of General Counsel. I'm happy to be here tonight. I'm also going to pass over to my colleague, Matt Rawson.
Thanks, Jeff. Hello, everyone. My name is Matt Rawson. I'm a law fellow in NEA's Office of General Counsel, where I work on student debt issues. And I will pass it to our colleague, Job.
Hello, my name is Job. I'm from Savvy. A little bit later, I'll be telling you about how Savvy works and how we are able to assist you all with your student loans. And I think the last person to pass it to is Jason.
Good evening, everyone. My name is Jason Long. I'm the Associate Director of Affiliate Relations at NEA Member Benefits, and I'll be assisting in the Q&A.
Thanks so much, everybody. So speaking of Q&A, we ask that everybody that if you do have any questions, please put it into the Q&A function within Zoom at the bottom ribbon, at the bottom of the box. Anything if the chat has actually been disabled for this. The Q&A box is just the easiest way for us to navigate through any questions and answers and how we can best get answers to those folks who have those types of questions. We do ask that if you do have any questions, please try to hold them all the way to the end of the webinar. More than likely, the content of the webinar will answer many of your questions. But if we don't get to anything in content that you are concerned about, please do put it into the Q&A box. And if we don't get to it live during this duration of this webinar, we will send an after action email that consists of answers to those missing questions. So without further ado, let's go ahead and get started. So I want to go over a brief agenda for this evening. The first thing we'll talk about tonight is about return to repayment. I think, as most folks know, that federal student loans have begun with payment again after a very, very long pause. After that, we will talk a little bit about the SAVE plan, which is a new income-driven repayment plan by the Biden administration that will help you save on your monthly payments on student loans. The third topic will be public service loan forgiveness. Many of the educators or public service workers that are joining us this evening have access to this program and may have loan forgiveness options through PSLF. And then we'll also talk about something called the account adjustment. And there's a deadline coming up associated with that. And that may help boost your way towards getting PSLF even immediately or even sooner than you expected. And then finally, we'll have a quick set of FAQs of things that we frequently have come across talking with our members about student loan debt and forgiveness options out there. And then finally, we'll conclude with a brief overview with Job about the Savvy tool and the Student Debt Navigator that is prepared for NEA members. So the key objectives that we have tonight is that you'll take away from all the things that we have tonight on how to enroll into the SAVE plan, that new IDR plan that I just mentioned, and also taking advantage of the PSLF account adjustment. So a couple of housekeeping things here. So for the latest resources from the NEA, whether it's news, webinar invites, new resources around student debt, you can text the word student debt, one word, to 48744, and you can access all of our resources around student debt support at nea.org/student debt support. And then that will also take you to a brief page when you sign up for that text alert through that little survey that you see on the left side of your window right now. That would just outline some of the different options that are available to you about what's available in terms of student debt forgiveness. More than likely, you qualify for a great loan forgiveness option through public service loan forgiveness, which we'll touch on tonight. But if you're not an NEA member, we do encourage you to join us. A lot of the power and influence that we help make these changes and help improve the lives of so many individuals, especially our NEA members, comes from the power of our union and our membership. So we do encourage any folks who are not union members to join the NEA at nea.org/join. The next housekeeping item is your federal student aid dashboard, or FSA-ID. You can go to studentaid.gov, which is the main link there, to create a federal student aid ID or FSA-ID. A lot of folks here probably on tonight probably already have this available to you, but if you don't, it is essential that you create an FSA-ID. It provides you access to some amazing information around your student debt. The student debt dashboard provides a wealth of historical knowledge and information on your federal student loans and different loan forgiveness opportunities. A lot of the things that are run out of the Department of Education on your federal student loans is linked to your FSA ID. So it's essential to have that portal login. If you do already have an FSA ID, make sure that you have all your contact information up to date. And to be clear also as well, your FSA ID is not the same login as your federal student loan servicer. This is a separate login. So let's start talking about return to repayment. So as I mentioned, the federal student loan payment pause that had existed since the beginning of the pandemic has ended at this point. So back in March 2020, all federal student loan payments went into an emergency forbearance, and that had paused all payments and interest rates at the % of 0. And this payment pause was extended several times, but ended officially on October 1st of this year. So we're going to walk through a couple of steps that are key to repayment. Obviously, the first set of payments was due in October, but these might be some good tips for you guys to know as you go navigate through this repayment space now. So the first thing that we ask folks to do is to make sure you identify your servicer. Many borrowers were transferred possibly to a new student loan servicer during the payment pause, just because things were moving and shuffling. For example, if you had applied for public service loan forgiveness or PSLF, your loans could have been transferred to MOHELA because MOHELA is now the main federal student loan servicer for those types of loans that are handling PSLF applications. There are also situations where federal student loan servicers have ended their contracts, such as Fed Loan Servicing. And when that had happened, your loans could have transferred to another servicer. If you're not sure which servicer has your student loans and where you need to be making payments to, your federal student aid dashboard, again, with your FSA ID, is your best way to finding out that information. And if you have inability to log into your FSA ID, you can call the number that we have right here and to obtain that servicer information. And we'll leave that up for a quick second here so you guys can see that. And while we're paused here for a moment, I saw a question that we are recording this webinar, and we will send out the slides and the recording at the end of this webinar too as well. So as I mentioned, you can go on your FSA ID to log in to look at who your student loan servicer is. And so this is an example right here. The bottom red box that we have highlighted says who your servicer is once you log into that dashboard, and that's how you'll quickly find that. We also ask that you update your contact information, especially if you've had an FSA ID for quite some time. Your servicer will need your current contact information to notify you about upcoming payments or any opportunities out there for loan forgiveness, especially from the Department of Education. So it's really essential that you make sure your servicer has your correct email address, telephone number, and also your mailing address. And as I mentioned, the Department of Ed uses this contact information of what you use in the FSA ID side to notify you about any changes to your student loans or forgiveness opportunities. We also ask that you guys enroll in auto pay. All servicers, all federal student loan servicers offer an auto pay system, and that helps streamline your payment process, especially if you're looking for PSLF too as well, making sure you have those on-time payments. But the big thing about auto pay, which it takes no time to enroll, you will save up to 0.25% on your interest rate. So it's a benefit that you can receive from enrolling in auto pay. If you were enrolled in auto pay before the payment pause, though, you might have to re-enroll. So make sure you check with your servicer on that front. And for the last step, I'm actually going to pass over to Sam to talk about income-driven repayment plans.
Thank you so much, Ronnie. So income-driven repayment plans are another option to better have you pay off your loans and better afford your loans. Now, there are a number of income-driven repayment plans, but in order to actually take advantage of it, you must be enrolled in the IDR plan. Now, if you want to take advantage of the Public Service Loan Forgiveness Program, you must be enrolled in an IDR plan. And if you look at that link right there, you're able to see what your IDR plan is. Now, if you're already enrolled, your servicer will let you know if it's time to recertify, which must be done annually. If your income or family size has changed, your monthly payment may change as well, since it is linked to that information. And if you're not enrolled in an IDR plan, you can go to that link to see what options might best work for you and to apply. Now, speaking of IDR plans, the newest of which was introduced earlier this year, is called the SAVE plan. This is the most affordable IDR plan ever. And like other IDR plans, it bases your monthly payment on the amount of your income and family size. Now, this is the most generous plan that is available, and it is available to nearly all student borrowers. So just to tell you some of the benefits of this. So it decreases monthly payments because the calculation that is done raises the amount of basically protected income before the payment calculation is made. So for instance, if you are a single borrower earning $32,800 or less, or a family of four, a little under $68,000, you will owe nothing on a per month basis. Now, other borrowers, based on the data we've seen, are saving more than $1,000 a year based on what they had before. Now, one of the biggest changes of this is, for the first time, any additional interest accrued above what your monthly payment amount would be is going to be waived. We've heard stories from many people that one of the most challenging things with paying their loans is month after month, seeing the actual principal amount stay the same, despite them actually paying it and it all going to interest. This benefit will change that. You will never have your actual total amount that you owe your principal grow. And also, it excludes your spouse's income from that calculation if you file separately taxes from your spouse. Now, just to give you some examples of how this is really changing the lives of millions of people, nearly 5.5 million people are now enrolled in SAVE, and 2.9 million of those will be paying $0 per month. So considering before having higher monthly payments, this puts more money in your pocket instead of having to pay that amount every month. Now, overall, if you are paying an amount that is over $0, as I mentioned, borrowers are saving on average about $1,200 a year as a result of SAVE. Now, you can see kind of right here, just an example of how family size and income affects what that monthly payment would be. But everyone's situation is different. So as you're going through and looking at the different options, there are estimators on the FSA website, which we'll get to in a moment. Now, some other benefits that haven't kicked in, but will do so in the middle of next year. Overall, it will cut the percentage of undergraduate loan payments in half. Borrowers with both graduate and undergraduate loans will still see a decrease from what the previous repay IDR plan was. It also will start to forgive loans after 10 years of payments for borrowers with balances of $12,000 or less. The data shows us that that most people that default on their loans have less than $12,000 total in terms of debt amount. So being able to have this, not having to pay 20 years for $12,000 or less is a really big thing to many people. Okay, so I know I've talked a lot about SAVE and why it's really great. Well, how does that help you right now? So you can actually, as I mentioned, you can apply for the SAVE plan at studentaid.gov/IDR. If you were previously on an IDR plan called Repay, or you recently applied for it, you will be automatically enrolled in the new SAVE plan. Now, we get a question a lot. Unfortunately, if you are a Parent Plus borrower, you are not eligible for the SAVE plan, even if you consolidate it. There are other plans, payment plans for Parent Plus borrowers, but SAVE is not eligible. Borrowers that are in default are not eligible. However, right now, the Department of Education has what they call the Fresh Start program, which helps people that are currently in default to get out of that. And once you are out of default, you can then register to be to have the SAVE plan. I'm going to pass over the next slide to Ronnie.
Thanks so much, Sam. So let's talk about public service loan forgiveness and kind of how SAVE works in tandem with all this stuff. So for those who haven't heard about public service loan forgiveness, or PSLF, this is a program that was created a couple of years ago. And the promise was simple when Congress created this program. You work full-time for a public service employer for at least 10 years. And that includes all public school districts, all public and nonprofit higher education institutions are eligible. And so the key thing about this is about who you work for and not what your role is. Oftentimes we talk to so many ESPs and CISPs out there that are union members that actually aren't aware that they're eligible for public service loan forgiveness, when indeed your job title doesn't matter. And all those folks who work for a public institution of higher education or school district or school are all eligible as long as you work full time. And then in addition to those 10 years, you have to also make 120 on-time student loan payments. And those student loan payments have to be on an income-driven repayment plan, like the one that we mentioned, like SAVE, which will work in tandem with that. Also to mention, the 3 years of the payment pause that we had here during the pandemic also count towards that 120 payments necessary. So once you complete steps 1 and 2 here of the 120 payments over the course of 10 years, you will get forgiveness on your remaining federal student loan balance. But as I mentioned, and I think some folks here know, unfortunately, up until 2021, the program had denied over 90% of applicants. And that's really when the NEA and our members really steered things into effect and urged this Biden administration to make a lot of changes to this program so that we can best serve our educators and public service workers out there to get access to PSLF. So the Biden administration, first and foremost, what they did is they introduced some new improved regulations around public service loan forgiveness. I won't go into the nuances and the nitty-gritty details about why folks weren't qualifying, but the fact of the matter is a lot of folks were getting denied. And so all these changes right here that we've listed on the screen were different ways about how we can get folks closer to forgiveness or immediate forgiveness through PSLF. And these things are now into effect at this point too. So one of the first things is that late, partial, and lump sum payments will now count towards public service loan forgiveness if the borrower is employed by a qualifying employer. And then some months also spent in deferment and forbearance, despite if you weren't making payments, also will now be counted as qualifying payments. These are instances if you were steered by your loan servicer to go into deferment or forbearance and any long-term aspects of economic distress. Those months could possibly now get also counted towards the 120 payments needed. Borrowers now who also consolidate their direct loans will now lose their payment progress. We had situations in the past where folks would consolidate their student loans into one account, and then they would lose all previous payment progress towards the 120 needed towards PSLF. And then borrowers who need additional opportunities for reconsideration, they think that they may have been wrongly denied in their application. There is also a process now in place for folks to do that and dispute that with the Department of Education and its servicers. And finally, for our adjunct and contingent faculty out there in higher education, there are more easier requirements now to meet the full-time criteria to access public service loan forgiveness now. They count the full-time requirement for higher ed faculty now by academic hours through a weighted formula instead of looking at your direct hours. So among those regulations and many other things that the Biden administration had done, we saw a ton of success in terms of folks accessing public service loan forgiveness. So as I mentioned, prior to 2021, over 90% of folks got denied. So of the folks that actually went through, 7,000 borrowers who received PSLF under the previous administration prior to any of these changes being made was just a mere number of 7,000. And so, as I mentioned, NEA and our members went into effect to urge this administration to make a number of changes. We had 170,000 I should say, messages sent to the Department of Education demanding debt relief and reforms to the public service loan forgiveness program. And since all these changes have went into place, we have seen 715,000 public service workers, including thousands and thousands of educators that have gotten their student loans forgiven through the PSLF program. And that is equated to $51 billion in debt relief approved through PSLF. And we want to put a big emphasis on this is so far, because there are still many applications that are waiting to get processed. And hopefully more folks like you guys out there today that will send more applications through and will get you the debt relief that you so deserve for all your years of support into your communities. So you might be thinking about how can you actually apply for public service loan forgiveness? Method one is using something called the PSLF help tool. This help tool is directly on the Department of Education's website on studentaid.gov. And this is just their easy way of filling out the PSLF application. They will confirm that your employer actually qualifies and that your request can be reviewed by them. And it's very easy. They just look up your employer, whether it's your school district or the public higher ed institution that you work for. And then it will ask you through a different terms of questions and answers after that, which will prepare your PSLF form. After that, you will need your EIN number from your employer to finish the form as well. And then finally, you have to request certification and signature from your employer to sign your form before actually submitting it to MOHELA, the servicer for PSLF. Now, that may all sound daunting, and which is why there is a second method. For all of our NEA members, if you're struggling with your PSLF application and need anything else related with your student loans, you can always consult our NEA Student Debt Navigator for support. This is created by our friends at Savvy, which Joe will talk to you guys about later on. But the Student Debt Navigator can help you apply for PSLF and help you take a lot of the steps above. But let's also now talk a little bit about the account adjustment. And so with the account adjustment, this is a one-time opportunity that we want to make sure that folks take advantage of. So in addition to the countless things that the Biden administration has been doing, they're doing a lot of things that help move folks towards the needle, towards forgiveness right now. Again, because the program was so defunct in the past, we really want to make sure that folks get credit to previous years of working in public service. And so the Biden administration is doing this thing called the account adjustment to help move folks move closer to forgiveness by automatically reviewing their payment history and again, counting more payments as qualifying. So this one-time account adjustment will count more time towards PSLF, like late and partial payments, payments made under any type of repayment plan. I mentioned earlier that you have to be on an IDR plan to qualify, but this account adjustment will count any payments made on other repayment plans as well. Payments made on Parent Plus loans, FFEL loans, and Perkins loans before consolidation, because only federal direct loans qualify for forgiveness under PSLF. And then months spent in extended forbearance, 12 plus months in consecutive forbearance, or 36 months total in the lifespan of your loans. And so again, this account adjustment timeline is coming up very, very quickly. So if you have different types of federal loans out there, there are many types of names that may be unfamiliar or familiar to you guys. And all these federal student loans, you can find out the name of it through your student aid account on the dashboard of your FSA ID. But if you have a federal direct loan and holders of these loans, the account adjustment will happen automatically in 2024. So when you apply for PSLF, whenever it is, your payment account will be automatically adjusted. There actually is no new steps that you need to take. However, the thing is that if you have a FFEL loan, a Perkins loan, or a Parent Plus loan, you will need to apply for direct loan consolidation prior to December 31st of this year. That's very important again, by December 31st of this year. After you complete loan consolidation, your payment account may be reduced temporarily to zero, which is completely fine, because that is when the payment account adjustment is going to take into effect, and your payment account will increase based on after the adjustment. So if you have any of those types of loans, make sure that you apply for direct loan consolidation prior to that deadline. And then after that, you can take advantage and apply for public service loan forgiveness and get the account adjustment to go into effect. So now let's turn to the FAQ. I'm going to ask Matt to cycle us through this process.
Okay, thank you for that, Ronnie. So I'm going to ask some frequently asked questions in the hopes that will help as many people as possible, and then we can get to some other questions later. This first one will be for Sam. And the question is, how do I know I'm on the right repayment plan for the account adjustment and PSLF?
Sure. Thank you for the question. So as I mentioned before, there are a number of different IDR plans. All existing IDR plans are eligible for PSLF. So that includes SAVE, which is the new plan from the Biden administration. It includes, and it used to be called Repay, was the previous version of that. There was the Pay program, the Pay as you earn program. There's also income-based repayment, IBR, and income contingent repayment. Now, for income contingent repayment, if you have a Parent Plus loan, you're only eligible for the ICR, unfortunately. I mentioned that earlier. But the process to do so is if you're already enrolled, you need to recertify your income annually to remain. And to do so, or to switch your plan, all you have to do is to go to studentaid.gov/IDR.
Thanks, Sam. So this next question, we'll go back to Ronnie. So Ronnie, how do I know that I am enrolled in the SAVE plan?
So this is a pretty easy one. So most borrowers who have already applied for the SAVE plan will actually see their new monthly payment reflected on their next billing statement. So if you apply for SAVE, more than likely you'll see it by December or by January right now, given that we're a little close to December at this point, but you'll see it very quickly. Now, the big thing is that your servicer may not reflect the change in your IDR plan immediately, but of course you can check the status of your application by visiting your account dashboard on studentaid.gov and logging in with your FSA ID.
Great, thank you. And now we'll turn to Jeff for the next question, which is why is my estimated payment higher under the SAVE plan than my previous IDR plan?
Yeah, thanks, Matt. So as the question suggests, when you apply for the SAVE plan, you'll be given an estimated payment amount. It's not been finalized yet, and that is just an estimate. It's not the final amount. It shouldn't be more than your current IDR plan, because as we've explained earlier in the show here, everyone should be saving money by going on to the SAVE plan. However, we have heard some isolated instances of cases where the estimates actually do appear higher. So that is incorrect. We believe that is typically fixed when you get the final amount, when you continue to process that application. And if that doesn't happen, then you should contact your servicer, I suppose, and make sure that the numbers are correct. It could also be because your income has increased since you last certified your income, or your household size has changed. So as those parameters shift, that shifts your payment amount. But barring one of those situations, the payment should come down. And again, the estimate may be incorrect, although we think that's happening less than initially.
All right, thank you, Jeff. And now we will go back to Sam for the next question, which is if I have private loans or refinanced my loans, am I eligible for forgiveness?
Well, that's a really great question. And as you see, unfortunately, no. If you refinance with a private company, that means the private company has that debt the federal government no longer does. And for this, the federal government can only forgive the debt that it holds. So if the following loans are not eligible for PSLF or other debt relief programs, for instance, if you have student loans that originated from state government programs, if you had a loan that's from a bank or commercial lender, if you had your federal loan and then refinanced it by a private bank like SoFi, a credit union, or a state agency, that unfortunately is not going to be eligible for forgiveness.
Thanks for explaining that, Sam. And now we'll head back to Ronnie. Should I apply for PSLF even if I haven't yet made 120 payments?
So this one's very timely because I was just seeing this one in the chat earlier, or rather the Q&A box. So yes, the short answer to that. And that is because you'll need to submit an application for each of your qualifying employers. And this reaches back to at least 10 years at least, right? Because you need to make 120 payments over the course of 10 years working for a public service employer. So submitting at least one application now will help save you a ton of time in the future. Obviously, a lot of folks probably in their 10-year duration haven't worked for the same school district or higher ed institution that entire time. So it makes a ton of sense to submit one every single year just to keep things up to date, or to submit one every single time you switch an employer. So again, you can go do the things through two different steps to submit your PSLF application, whether it's through the PSLF help tool on the studentaid.gov website or also on the Student Debt Navigator through our friends at Savvy.
All right, so here's a quick one for Jeff. Do the years of public service have to be consecutive to count for PSLF?
This is a super easy one. No, you basically are cobbling together 120 months in which you're working full-time for a public sector employer, a qualifying employer, while making payments under an IDR plan. So if you work for 5 years in a public school, then you go somewhere else and work in a non-qualifying employment position, but then come back. As I said, as long as you can cobble together 120 months, forgiveness is yours.
Thank you for explaining that, Jeff. And we'll go back to Sam. Do Parent Plus loans qualify for PSLF?
So the answer is yes, with an if. Yes, they do. They can qualify for PSLF, but the borrower, if in the case of Parent Plus, that's many times the parent, they must consolidate them to qualify for PSLF. So if you are a borrower parent that only has Parent Plus loans, you can actually turn those into direct loans. Previous payments on those plus loans will count to the PSLF as long as you do it by the end of that period, by January, really the end of this year, to take advantage of that account adjustment. That is why we are telling people that this is really an important time, and we don't want you to lose out on that opportunity to get that credit. If you are a borrower or parent that has both a direct loan and a Parent Plus loan, you can consolidate those loans. Now for this, the previous payments for the direct loans and the plus loans will count for PSLF, once again, as long as you do it by the end of this year.
Okay, and here's one final question for Ronnie. As an adjunct or contingent faculty member, I do not teach at my institution full time. Does PSLF apply to me?
Yeah, so this is what I alluded to earlier with the updated regulations that the Biden administration put into effect this summer. So under the new regulations, as soon as July 1st, and this is also back channeling, so it doesn't mean that employment ahead from that date is the only thing that counts for this. Previous employment now also counts under the same calculated formula. But for the purposes specifically of public service loan forgiveness eligibility, if you are an adjunct or contingent faculty member that doesn't work full-time at a higher ed institution, you now have a way where it's calculating your credit hour or content hour of how many courses you teach by the number of 3.35. So this, in essence, will then help you bring over something called the 30-hour threshold that is needed of what they call to calculate you as full-time. And so by this formula of 3.35, you only need to be teaching 9 credit hours per semester as an adjunct or contingent faculty member to meet the full-time requirement for PSLF eligibility. This was something that we had heard from a ton of our higher ed members that was a big struggle for them to get PSLF access. And so hopefully this new calculated formula will help get folks all over that threshold and be acknowledged as full-time.
Okay, great. Thanks, Ronnie. With that, thank you all, and we will pass the mic over to Job and our friends at Savvy, who will tell you more about the Student Debt Navigator and other forms of support that they offer.
Thank you so much. So if any of you are interested in wanting to sign up right now, you can scan this QR code. If not, there will be other opportunities, and we will provide all of you with the link to get signed up later on. Alrighty, so for those of you who have never heard of Savvy and are new to us, here's a quick overview. We are a public benefit corporation, which means it exists in our mission and our charter that we are here to serve the public and help others out as much as possible. We started just over 5 years ago in order to help borrowers like all of you that are here. We're run by experts and advocates that have over 2 decades of experience, and many of us also have our own student loans, myself included. So we have firsthand kind of insider knowledge that helps us to better serve all of you. And finally, our goal is that we are focused on savings, and we want to find you as many savings as possible, specifically through the programs that have been discussed, income-driven repayment plans, and public service loan forgiveness. A little bit more about us. The way that our process works is that we help simplify all of this information for you by letting you see what you qualify for and enrolling digitally right within your Savvy account. So we are able to create any necessary forms and get them submitted for you. It has that end-to-end enrollment, meaning the forms we've discussed that you submit to apply for an income-driven plan or public service loan forgiveness can be created and submitted. And not only that, but you can track their progress within your Savvy account on the Debt Navigator. Another great benefit is that there's one-on-one support available. So our student loan experts are very knowledgeable about all of these programs, and you have access to that one-on-one support to get personalized help with your situation. Some stats for you. Working with Savvy and using the Student Debt Navigator, many people reduce their student loan payment by about $150 per month. And on average, they qualify for about $20,500 in forgiveness through these programs. So some really substantial savings. And as of right now, we have helped users find over $1 billion in projected loan forgiveness. So we really encourage you to get signed up. That way you can take advantage of these savings too. So in order to get started, you will need to sign up through the NEA website. That way you can link your accounts. So you can go to neamb.com/student debt, or you can scan this QR code. From here, you'll be able to start entering your information before being redirected to the Savvy website. So once you are on the Savvy website, if you are a returning user signing in, this is our homepage for NEA members. So if you come over through the NEA website, it will drop you off right in your account. If you come in through our website, this is the homepage where you can sign into your existing account or get signed up. So the Debt Navigator is designed to be similar to TurboTax and collect all of the information we need to show you your eligibility for all of the programs that have been discussed. So the first thing that we'll start off asking for is family information, asking where you live, your tax status, if you're married, and if you have any dependents. That way we can use all of that information to calculate your payment on an income-driven repayment plan. After you enter all of that information, that next button down at the bottom will turn green, and you can proceed to keep entering more info. After that, you'll be able to add some income information. You'll be able to enter what you currently pay for your loans, and then we'll ask a couple of questions about your income to determine what type of documentation is needed or how to calculate your annual income. After that, you'll be able to add your employment information. And this is really useful because it lets us take a look at your situation and determine your eligibility for both public service loan forgiveness and teacher loan forgiveness. So you can add all current and past employment on here to see if they meet the requirements for these programs. We've made it really easy to do. We have a database that actually has over 1 million employers in it. So you can search for your employer by name and add them to your profile. If it is a qualifying school for teacher loan forgiveness, you can enter a couple extra eligibility questions, and we can determine if you would qualify for teacher loan forgiveness as well. So really beneficial and crucial to add your employment. That way we can take a look at all of the options that are available to you. Once you have added all of your employment, you can then proceed to the next page. And this is the loan sync page, which I think is one of the most important pages in the process. So here you'll be able to add all of your student loans to the Debt Navigator so that we can take a look at your entire situation and provide you with those estimates. The easiest way to do this is to sign in with the same username and password as your online servicer's account. Once you do this, we will take a snapshot of your situation and we'll pull over all the necessary information. We have some backup options like adding your loans manually or uploading a record of your loans that you can download from the FSA website. So a lot of different options for adding them in there. A lot of people have questions about if they have the correct loan types or if they need to consolidate. And that is another reason that adding your loans here is helpful, because we will take a look at your specific loan types. And if you do need to consolidate, we'll let you know that and help walk you through the process. We'll also do the same with taking a look at your repayment history to get an idea of how many payments you have and how many you would still need to qualify for public service loan forgiveness. After that, the page that everyone wants to get to is the results page. And here we will break down showing you exactly what you qualify for. So we'll show you what income-driven repayment plans you qualify for, with what your monthly payment would be, how far along you are towards forgiveness, and how much forgiveness you can actually receive. Our website will automatically show you the plan that will save you the most and get you the most forgiveness. But if you want to see everything that you qualify for, that will be there for you to explore as well. In many cases, specifically for PSLF, because there are additional requirements like enrolling in an income-driven plan, it will also bundle the options for you, showing you what it would look like if you enroll in an income-driven plan to pursue PSLF, or if you are wanting to pursue teacher loan forgiveness. It's really great because you just have to enter a little bit of information about yourself and it will automatically check for all available options. After you find the one that is the best fit for you and you're ready to get enrolled, you can click continue to get started on your applications. So here at Savvy, we do offer different membership levels. We have our DIY plan, which is free, but is also, thanks to NEA, you can access what is normally our premium membership free for your first year. So we call this our essential membership. And what this does is unlock all of the features of Savvy, including letting us create your applications for you digitally and submitting them to your servicer to make this process simple and efficient. Moving forward, we also monitor your loans to keep you on track for forgiveness. And the biggest benefit is that you'll have access to that personalized support from student loan experts. So we really do encourage you to enroll in this essential membership to unlock all of the Savvy features with this debt navigator and make this process as easy as possible. And remember, the essential membership is no cost for the first year. And even if you don't enroll in the essential membership, there's no cost to creating a Savvy account and seeing what options are available to you. Once you enroll in that essential membership, when you create your applications, this is what that process will look like. If you're applying for public service loan forgiveness, you'll have the option to create the form called the ECF for each one of your employers that qualifies. In many cases, we also already have the correct contact information needed to send your form over and get signed as soon as possible. From there, we'll take care of submitting it and getting it processed by your servicer. We also do the same with your income-driven repayment application. And a big benefit of the essential membership is that we pre-fill these applications to ensure that they are completed correctly. Believe it or not, the #1 reason applications are denied is because there were errors on the form. It's not because you didn't qualify, it's just because there was a mistake made when filling out the application. But by using the Savvy Essential membership, we pre-fill the forms to ensure they're completed correctly and have the best chances of being accepted. After you create your applications, you'll be able to track the statuses in detail to see exactly what step you're on, what steps are still to come, and if there are any action items needed from you. You'll be able to see those application statuses, as well as some other things related to your account on your dashboard. So here in this screenshot, you can see it will show active applications. Once you start any forms for PSLF or TLF, those will show up on here as well to give you a simple overview of everything that you're working on with Savvy. As you are on our website and working through the Debt Navigator, if you have any questions, we're always here to help. You can click Contact Support from any page of our website to be connected with resources. We have our Help Center, which includes articles on common student loan topics, frequently asked questions, and even videos walking you through completing the Debt Navigator application. You'll also be able to reach out to our support team to get that one-on-one personalized help with your situation. And finally, we have a brand new call center that we just launched that can give you real-time answers to your questions. So feel free to click Contact Support from any page to access these resources. So wrapping up, I will leave you with a couple of next steps. If you don't already have a Savvy account, we really do encourage you to get signed up because it can make understanding all of these student loan topics and getting enrolled in these programs very easy. So be sure to sign up and enroll in our Essential Plan, which is free for your first year thanks to NEA, and be sure to complete those Debt Navigator applications to see what you qualify for. Thank you.
Awesome. Thanks so much, Joe. So now we'll turn to our public Q&A portion. Have roughly around 12 minutes left before we hit the top of the hour. So would any of the panelists like to flag any previous questions that they want to flag right now? I know we've marked a couple that we wanted to answer live. If not, I'll pick one myself also as well.
Yeah, I just wanted to reiterate one point, Ronnie, and that's that so the account adjustment is an automatic process, right? It's not an application that you need to complete or any action you need to take. Some people have already benefited from it. The department started automatically reviewing accounts, I believe, in July of this year. And I believe they've announced they're working through accounts on a rolling basis. So I don't know what the order is. I think they're working to identify people, and correct me if I'm wrong here, Ronnie, working to identify people who are close to or where the adjustment might push them over the line to forgiveness. So they have some prioritization, but they are still working through that process. And some people may not hear back or have their payments adjusted until early 2024. So you don't need to actively take any steps. I'm not exactly sure how you could kind of check on the process of that. I don't know that there is a way to do that because it's this automatic process. So unfortunately, like a lot of things with PSLF, sometimes the only answer is just a little bit more patience, which I know is hard to suggest given that folks have waited for years for this promise of forgiveness that you're entitled to. But as far as just how do I get the benefit of the adjustment, it is automatic.
And I think a good example to what Jeff mentioned is that the account adjustment that is actually already into effect in some cases. We've actually seen a lot of NEA members get forgiveness already through PSLF because they suddenly have new credit onto their account adjustment going into place. So there have been success stories from that front too. But 2024 is really when they're going to really roll into it. So there's going to be hundreds of thousands more folks in that boat coming up. But again, patience is probably the most key to it all. I did want to touch on one. We have a question that asked, in order to qualify for PSLF, does your current occupation and degree have to match? This is a quick answer and it's no. The type of degree that you got or your current occupation doesn't really have to matter in this whole situation. Again, it's whether you work for a public service employer currently or previously, right, while you were making payments. So if you work for a nonprofit employer, which includes a lot of higher ed institutions and pretty much all public school districts, then you qualify for public service loan forgiveness. It doesn't matter what type of degree that you have. It doesn't matter if it's a bachelor's degree or a master's degree or a doctoral degree. All that student loans, as long as it's a federal student loan, can count towards forgiveness under PSLF. Let's see here. We have another one here that says, if we are just starting out, should we wait to apply for PSLF or should we do it right away? In these cases, we kind of recommend folks to kind of apply for PSLF at the end of their teaching year. That is probably a good time for you to kind of recycle everything and get the credit. We kind of have folks who right now, right, who have worked over 10 years in public service that apply all at once and certify all of their employment from their previous 10 years at once, right, just to backtrack all that credit. But for new folks, we encourage you guys to do it once a year annually, whether it's through Savvy or the PSLF help tool. Again, they'll help save time down the road so that you're not scrambling to find, certification for multiple different types of employers, especially if you move between different jobs. And then that way, of course, the Department of Education will have all your updated paperwork already processed, so you don't have to worry about it down the road. So for our new educators out there, we definitely encourage you to apply once a year, just so you can keep at a rolling basis all the way until you get to 120 payments. Jeff, Sam or Matt, any other questions you guys see that you want to answer live?
There was one a little while back. Someone just said that they had submitted their application after the deadline. And I believe they were referring to last year when the PSLF did have a deadline. As Ronnie mentioned, there have been some changes in the account adjustment kind of takes over what many of those benefits did as well. So you are not out of luck. Ronnie, I don't know if you want to add any more details onto that, but
yeah, so the deadline that we think you're alluding to is probably the PSLF waiver. That was the first iteration of what the Biden administration was looking to rectify any previous denied accounts or payments that didn't actually qualify for PSLF. As Sam mentioned, that deadline was well a while ago, and this account adjustment is essentially the second iteration of what was the waiver. The account adjustment, given that it happens on an automatic basis and it looks at every single person's account that has a direct loan, goes through a duration of undetermined amount of time. So there is no deadline, right? But however, the only deadline that you're really concerned about now is that if you have a FFEL loan or a Perkins loan or a Parent Plus loan, you need to make sure that you apply for a direct loan consolidation so that you can get the effects of the account adjustment at the beginning of the new year. That is the only deadline that applies for those folks. But if you have a direct loan, don't worry about it. Again, the account adjustment is an automatic process. And again, if you are unsure about what type of federal student loan that you have, you can find that all out on your federal student aid dashboard on the studentaid.gov website.
So I have a question I'd like to answer. It's a very good question, as many of these are. It's asking whether some of these programs could be repealed based on the next presidential election. I mean, we'll just call it what it is if Trump is reelected or if a Republican is elected, would they repeal these benefits? It is possible. I mean, these are regulatory actions that could be undone. I think it's safe to say that it's unlikely for most of these programs that once they're out there and once they're operating, that the different Secretary of Education would want to repeal them. That's not to say that they are all safe. They could be repealed, but once people are saving money, it's a hard pill to swallow. So we'll have to wait to see what happens. Some of these programs that have been rolled out recently are under attack in the courts already. We all know, unfortunately, I think this is a good time to just let folks know, if you don't know, that NEA played a big role in fighting for debt cancellation and then fighting to defend the program before the Supreme Court, which unfortunately, because of the makeup court, went down in June and overturned the plan. We don't think that that's going to be the case with these other programs if and when they are challenged in court. Some have been, some others may be, but we think that they're on the department is on firm footing in implementing these plans. Again, that doesn't stop a subsequent administration from repealing them, but we haven't really seen, although the last administration didn't take positive steps to improve the program, they weren't tearing it down either. So that's wild speculation on my part. Sam is our policy guy. Ronnie is doing our great lobbying work on these issues, so they may have a slightly different take, but I don't see that as a huge risk. And certainly it's not a reason not to take advantage of the benefits while they're here.
Yeah, Jeff, I completely agree with that as well. From a policy side, the regulatory process can be long and very detailed. And even if the next administration decided to go that route, it could then face steps that would stop it or delay any implementation of that as well.
So there's one question I want to address, and there have been actually a few of them around teacher loan forgiveness, or TLF for short. And so some folks were confusing between TLF and PSLF, being very similar acronyms. So I wanted to lay it out about the options between those two and what that means. So teacher loan forgiveness is a different program that is separate from PSLF. It is specific to educators working in Title I schools, specifically classroom teachers. So different types of educators like ESPs and SIS actually don't qualify for TLF. And public service loan forgiveness is not just for educators. It's for all different types of public servants, all working in the public sector or a nonprofit. And so for teacher loan forgiveness, while it is very enticing to get loan forgiveness through this program, it only provides a finite amount of forgiveness, up to $17,500 of forgiveness on your federal student loans. So unlike PSLF, it doesn't forgive your remaining balance of your federal student loans, it only gives you a small nominal value. And the program is older, so the program hasn't been updated to reflect the interest challenges and the current cost of college challenges right now. And so it may be enticing to go get TLF right now, just to get a little bit of your dent of your student loans down now while you're on your pathway to PSLF. However, that isn't a route that we recommend at all, because if you do take TLF, it will reset, it will turn your payment counts that you use for TLF to zero. So say you've been working for 10 years in public service and you decided to take TLF. Well, you will lose 5 years of credit towards PSLF because you opted to take TLF. And then you'll need to work an additional 5 more years to get to the 10-year amount and 120 payment amount to get public service loan forgiveness. So unless that you work at a Title I school and have less than a balance of $17,000, it usually isn't something that we recommend. PSLF in this situation is kind of king to get you your best bang for your buck in loan forgiveness, especially if you don't want to get tripped up with the payment count and not getting those not counted towards public service loan forgiveness. But of course, the easiest way to figure out what is the best loan forgiveness option for you is to please refer to our friends at Savvy. They can work with you and help you navigate to see whether TLF might somehow make more sense or PSLF. But 99% of the time, we recommend most folks to go to PSLF for that reason. Let's see here. Jeff, Sam, do you guys have anything else? I see one about, I have my loan serviced by Nelnet. I just filled out the save form. It is estimated that I paid $404, but I currently only paid $200. Should I continue with the process? I don't want to pay more. Sam, do you want to tackle this one?
Yeah, definitely. So as we discussed earlier, many people that are using the estimator on the studentaid.gov's website are getting some amounts for save that are higher than they had previously done. We believe this is an error, and as Jeff mentioned, when you actually, that is just an estimate. So once you actually start paying, that amount should be different.
Thanks, Sam. Any others? We have 1 minute left, so we have time for one more question. Jeff, do you have anything you want to highlight?
I don't think so. I have a question, Ronnie, and I'll just confess that I don't recall the answer to it right now, but I want to make sure we address it. We have several questions from retirees and others who have left either the teaching profession or no longer working for a public service employer, I assume. And I don't recall where we landed during the limited waiver. We were under a different situation, but I was just directing that question to you or Sam to address whether or not those folks now remain eligible, or if their eligibility has ended since they're no longer working for a qualifying employer.
Yeah, I'm happy to answer this one. So obviously we have a lot of NEA retired members are part of our union. And the unfortunate aspect is one of the guidelines for PSLF is that if you're not currently employed by a public service employer at the time of forgiveness, even if you've hit 120 payments and 10 years working for a qualifying employer, you cannot get forgiveness because you're not currently employed at that public service employer. This is something that NEA has been looking to really work on and help reform and help change this, because there are a ton of folks, like you mentioned, like you, who may have put in their dues, put in decades of work to their communities, but can't access PSLF right now, but yet still have student loans right now in retirement and still have to pay it off. And so that's something that we're looking to change. There is a piece of legislation out there called the PSLF Payment Service Completion Act that we are endorsed on, and that we are trying to push through Congress to make these types of changes so that we can rectify this in the future. But unfortunately, at this moment, if you are retired, you have to re-enter into the public service profession to qualify for forgiveness under PSLF, even if you've met the other criteria. Okay, so with that said, thank you so much, everybody, for joining us this evening. So we will follow up, of course, afterwards with the recording and slides through via email to all registrants of this webinar. That will have all the pertinent links and information that you need to know that will get you to whether it's the Savvy tool or any resources around student debt. We really appreciate what you all do for us as our educators across the nation. It is our service to help you guys navigate through this process. So it's been a pleasure. But again, please stay in touch if you guys have anything else. But otherwise, you will see the slides and the rest of the Q&A then. But have a great evening.